Alphabet's Google now won't have to pay at least one huge fine to the EU. The tech giant won its challenge on Wednesday against a $1.66 billion antitrust fine imposed 5 years ago. The European Commission had accused Google of hurting rivals in online search advertising. It said Google used its dominance to prevent websites from using brokers other than its AdSense platform that provided search adverts. The practices it said were illegal took place from 2006 to 2016. But while the Luxembourg-based General Court mostly agreed with the EU competition enforcer's assessments of the case, it annulled the fine. The judges said the Commission had failed to take into account all the relevant circumstances in its assessment of the duration of the contractual clauses that it had found to be unfair. The AdSense fine was triggered by a complaint from Microsoft 14 years ago. Google has argued it changed the targeted contracts in 2016 before the Commission's decision, but the company must still pay a separate EU penalty. Last week it lost its final fight against a $2.7 billion fine for using its price comparison shopping service to gain an unfair advantage over smaller European rivals. Google isn't the only US tech giant to fall foul of EU regulators. Meta faces a huge fine over its alleged efforts to dominate the classified advertising market. That's according to Britain's Financial Times on Wednesday. The report said EU regulators will claim Facebook's parent company links its free marketplace services with the social network in an effort to undermine its rivals.
In a world where tech giants often find themselves at loggerheads with regulators, Google has managed to pull off a significant victory that could have far-reaching implications. Imagine waking up to find out that a $1.66 billion antitrust fine has been wiped off the slate. Yes, you heard that right. Google, the behemoth that has become almost synonymous with online search, recently won its appeal against the European Commission's hefty fine. But hold your horses. This story is much more intricate than just a monetary reprieve. Stay tuned as we delve into the nuances of this landmark decision and its potential ripple effects across the stock market. Alphabet, Google's parent company, along with key regulatory bodies, have all been thrust into the spotlight. Rest assured, there's more to this tale than meets the eye. The annulment of such a massive fine will undoubtedly embolden tech companies globally, providing a case study in navigating complex regulatory landscapes. Additionally, it raises intriguing questions about the balance of power between multinational corporations and government agencies committed to maintaining competitive markets. If Google can emerge victorious from such a high-profile legal scuffle, what does this mean for its future strategies and those of its competitors? Welcome back, everyone, to Investocracy.
There had been a lot of fights with Google, with other big tech, and the EU. What does a win mean for Google in this case?
Yeah, so they're back in court this week. And reminder, just last week we had some verdicts coming from the European Court of Justice going in the other direction, both for Apple and for Google, to the tune of $14 billion for Apple and something close to $2.5 billion for Google. Now you get a bit of free reprieve there in the European General Court. Basically, this was a case about it being very difficult for third parties to advertising to come up on Google search. The EU Commission said this is anti-competitive. This has now been struck down. And Google was really sort of explosive in their language on this. They were saying that basically the EU was using quasi-criminal level fines against them. It was way out of proportion, saying that the case had a ton of holes in it. But we should say that this is the European General Court. This is not the final word on this matter. The ones that we got from last year were at the highest court of Europe, the European Court of Justice. This could still go there. But again, a bit of reprieve from big tech out of Brussels this week.
When one thinks of Google, the first thought is usually about its ubiquitous search engine, or perhaps its diverse range of services. However, lurking behind this behemoth's facade is a history of legal skirmishes, particularly with European regulators. The plot thickens with the latest chapter where Google won its appeal against the European Commission's $1.66 billion fine for anti-competitive practices involving its online search advertising business, AdSense. To understand the gravity of this decision, let's rewind to 2019 when the European Commission found Google guilty of abusing its dominant position. For a decade, from 2006 to 2016, Google allegedly prevented advertisers from using competing ad brokers. Think of it as setting up a lemonade stand only to find that the city won't let anyone else sell lemonade within 10 blocks of you. The incredible weight of this decision lies in its potential consequences. If Google's approach to ad brokering was deemed unfair, this could reshape how similar practices are regulated globally. The court upheld most of the Commission's assessments, but annulled the decision imposing a fine of almost 1.5 billion euros on Google, on grounds in particular that it had failed to take into account all the relevant circumstances in its assessment of the duration of the contractual clauses that it had found to be unfair, the judges said. Yes, essentially, Google's legal wizards managed to highlight that not all facets of their long-standing agreements were thoroughly examined, providing a reprieve from paying up $1.66 billion. This subtlety underscores how detailed legal scrutiny can turn the tides in high-stakes regulatory conflicts. But before we go any further, if you want to keep up with Google's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Back to today's video.
So this is a positive outcome for Google. Explain the basics of the court's decision.
Yeah, so it is actually quite a rare win for Google in the European Union's courts here. It's important to say this is a win in the lower tier court. That's the EU General Court in Luxembourg. So the decision can actually be appealed to the European Court of Justice, which is the bloc's highest court. Now, effectively, this $1.7 billion fine was slapped on Google in 2019 after EU antitrust chief Margrethe Vestager said that it was illegally preventing rival search engines run by the likes of Yahoo and Microsoft from placing ads on websites like online newspapers, travel platforms, and blogs, etc. But now, of course, that $1.7 billion fine has been struck out by EU judges who, as you've just said, cited a number of errors in the Commission's investigations, including in their definitions of certain things like market definition and the duration of the alleged abusive behavior.
This isn't the first round of Google's boxing match with the European Commission. Over the years, the tech titan has tallied up more than $10.6 billion in fines. Earlier in January, another significant penalty of $2.6 billion was levied against Google for favoring its own shopping services over those of its competitors. And who can forget the staggering $5.1 billion fine for compelling Android device manufacturers to pre-install Google apps? Each of these cases serves as a chapter in an ongoing saga where Google continually finds itself under the regulatory microscope, each time defending its business practices with vigor and tenacity. Data supports the notion that despite these setbacks, Google's stock has shown resilience. Google's Class A shares showed a positive increment of 0.6% in pre-market trading right after the annulment news, closing previously at $159.32. These legal tussles, though weighty, haven't deterred investor confidence much. Could it be that Google's stranglehold on the tech ecosystem is just too robust to shake? The immediate positive response in Google's stock price highlights investor sentiment that seems to believe in Google's long-term vision and its capacity to surmount obstacles, both legal and operational. The stock market, often likened to a roller coaster, is notorious for its unpredictability. Yet even in this volatile environment, savvy investors discern clues and position themselves wisely. The common thread between regulatory battles, subsequent victories, and stock performance becomes an intriguing narrative about resilience and calculated risks. Google's victory adds another layer to this complex story, suggesting that despite regulatory headwinds, some ships are just too formidable to capsize. It's a testament not only to Google's corporate strategy, but also to the faith its investors place in the future of the tech giant. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Yeah, I mean, Google itself, funnily enough, saying they're pleased with this response. They said it really factored on a very narrow subset of text-only search ads, and basically they'd gone back and changed the contracts from 2016. But this isn't the only focus on ad tech and its power within that space, not just in Europe, but also in the US.
Yeah, indeed. So you have two parallel, I suppose, fronts really on Google's advertising technology business. So the case today was really more about display advertising. But when it comes to advertising technologies, there's a much more, if you like, existential risk to Google's long-term sustainability in these types of markets. You have the Department of Justice case that's obviously embroiled in legal proceedings at the moment, but also in the European Union, they have their own investigation open into Google's advertising technologies. which we assume could lead to an eventual breakup order, potentially in the coming months. That's an investigation that still needs to be concluded, but the European Commission is certainly making progress on what would be its fourth investigation into Google's business and potential abuses of dominance.
As we wrap up this engaging dive into Google's latest victory, the decision by the Luxembourg-based General Court to annul the $1.66 billion fine can't be understated. Such news reverberates not just in the boardrooms of Alphabet, but also across investor meeting tables, market analysis teams, and indeed, individual portfolios. Google remains an indomitable force, showing that strategy and legal prowess can shape its course amidst turbulent regulatory waters. As of now, Google's stock stands resilient, emphasizing its robust market position. Forecasters predict a continued upward trajectory, bolstered by not just positive quarterly reports, but also by victories like this that instill investor confidence. Currently trading positively even amidst the legal battles, Alphabet is seen as a strong buy by many analysts who look at both its financials and its fortitude in navigating regulatory challenges. This illustrates the broader implications of regulatory decisions in the tech world, affecting not just market perceptions, but also future regulatory approaches and corporate strategies. So, what's your take? Is Google's latest win a resounding affirmation of its market prowess, or does it signify looming challenges in the regulatory landscape? We'd love to hear your opinions. The conversation around Google is far from over, and your insights could very well be the next big talking point in stock market circles. How do you think this verdict will influence other tech giants facing similar scrutiny worldwide? Let's dive into this discourse together, as the evolving landscape of tech regulation promises to yield many more twists and turns. And finally, if you would like to know what companies like Google have been up to these past few days, go ahead and click on the next video on your screen. See you there.